sales. And staff sales, you refer to number 4. Staff is allowed to purchase stock at cost plus 20%. These amounts to 38,400. Now 38,400 multiplied by 20 over 120 equals to 6,400, and that's our GP. If you have a look at this, we've got GP from normal sales, GP from markdown sales, and then GP from staff sales. Add all these together. 52,680 plus 16,720 plus 6,400, and that will give you a total of 75,800. And that will be our profit and loss. I just want to draw attention to the following, the requirements that says, show the calculations of the claim presented to the company. Show all the calculations, clearly indicate what is being calculated. So it's imperative that you have headings of what you are calculating. So if you are calculating staff sales, indicate normal sales, markdown sales, or also staff sales, because it is a requirement according to this extract that I've given there. Okay, now once we have this, we're gonna now do our trading account. We have been now given our trading account opening stock, an amount of 57,600. The sales, do not forget that you need to subtract the sales returns. Purchases, you know that you need to subtract purchases returns. So our purchases, import duties, which is given to us there, 30,480, and we know this side will be sales, where we need to subtract our sales returns. Our purchases less our purchases returns, while you can subtract it, 181,440, subtract returns 34,320. I'm getting 147,120. 147,120. Input duties is given to you. Now sales, remember, less sales returns. Sales, it's 230,190. Subtract returns of 18,540. It's 211,650. You would see we have just calculated our profit and loss. Profit and loss of 75,800. Now, what we do not have, remember, the entire inventory was stolen, so you could not determine what was the value of the closing stock at that point in time. This is what you need to figure out now. So your closing stock, you're just going to now balance out that account, and that's now going to give you then the indication of the closing stock. Let's do that together. 57,600 plus 147,120 plus 30,480 plus 75,800. 311,000. 311,000 on the debit side, and also indicated on the credit side. Then we subtract the credit side of 211,650, which gives me now closing stock of 99350, which means the value of the stock at the point of theft was 99,350. Now, if you could remember at the beginning of the lesson, I said you need to circle the 9,600 of the stock that was still not stolen, that was left behind. So you need to show we've got 99,350 less the salvaged stock of 9,600, and that's the amount that then we're going to present to the insurance company for a claim. So 99,350 subtract 9,600 and we get 89,750. That is the amount that we're going to now present to the insurance company for them to now pay us out that amount of 89,750. I want us now to recap so we have a clear understanding of what we were doing. The first thing is we have been given total sales. Now remember, sales is sales, whether it's credit sales, cash sales, sales will always be captured as one amount. It will not be separated for you. Remove all the other sales that's been given. In this instance, you've got staff sales 38,400, and markdown sales or discounted sales. So you can get now your normal sales of 137,070. Point number 2 of critical importance. You must be given an instruction that says where should you remove your returns. Some activities will tell you to remove the returns from the normal sales. Some activities will tell you to remove the returns on total sales. So you need to, because that will then affect your gross profit. Now, as per instruction, we subtracted the 18,540, which is the sales returns from our normal sales as per instruction number 2. We get now normal sales of 118,530. We calculate the GP. We have been told here it's 80%. Now 80 over 180. Many students make an error here. They try to calculate cost of sales. No, we are calculating GP. 80 over 180. If the markup was 10%, it will be 10 over 110. If it was 50%, it will be 50 over 150 in order for you to get the GP of 52,680. Markdown sales. I also would like you to block the 54,720, and I'll tell you just now why. Multiplied by 100 divided by 80, because of we've sold this less 20%, it gives you 68,400. Now, the 68,400 and the 54,720 are sales. This is original sales. That would have been expected sales if there was no discount of the 20%. Now, when you calculate your cost of sales in the next step, do not use the 54,000 of the actual sales, but you use the 54,000 at the end. You need to get your cost of sales first before you can subtract your cost of sales, cost of sales from your sales, which will give you then your GP. 68,400 multiplied by 100 divided by 180 gives me cost of sales of 38,000. Now I'm applying that methodology there. Actual sales, not anticipated sales, please. Actual sales less cost of sales gives me 16,720. That is the gross profit. You might even get a loss gross profit of the markdown sales. And the last calculation, your staff sales, it's 20%. 20 over 120 gives us now 60 4,000. We add GP from normal sales, GP from markdown sales, GP from staff sales, and it gives us 75,800. Now, once you've done the calculation, you now complete your trading account. Opening stock is always given to us. Remember, purchases less purchases returns, sales less sales returns, import duties, and then your gross profit, which we've just calculated, add the debit side, subtract it from the credit side, and now you know the value of your stock at the point of fire, the point of theft, whatever incident that occurred there. Now you put in a claim, you've got closing stock of 99,350, subtract salvage stock. This is the stock that was not stolen. Now you've got